Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down from a technical and order flow perspective, and in doing so, I will provide as much free education as possible. So I really suggest that you stick to the video till the end, and I will see you on the charts. In today's video, I will be providing a complete breakdown of the situation that we currently have for XRP USD. Because we do have a very interesting price action and structure, the market has also now created a move from our previous analysis, so it's definitely time for an update. Now, starting here from the monthly, what we can notice is that at the moment, the market has just created a rejection from the previous monthly low. In fact, from here, during this very strong bearish move, the market created a rejection to the upside, confirming that this area is strong support and demand. The market then went lower and tested once again this area, and this time it got rejected even more aggressively, breaking for the first time since definitely several months, almost a year, above monthly structure. This is the first time that we're seeing monthly bullish structure with the market creating a higher high. In fact, from here, we had only seen the market creating lower lows and lower highs. This is the first time that the market failed in creating a monthly lower low and broke above the previous high. Now, at this point, what we also had is the creation of this monthly W formation. Now, in general, after the creation of a W, what you would expect is for the market to create a move to the downside to go and complete the pattern at the previous resistance turn support before then getting a rejection to the upside, which is in fact exactly what we could expect also in this situation, a retest of this previous resistance turn support before then getting a rejection to the upside. Now, if we drop down on the weekly time frame, what do we see? Now, when it comes to the weekly, we had identified for several weeks how the market was basically moving in this range, where we had the bottom of the range here acting as support and the top of the range here acting as resistance. However, we have now seen a break above this range, so a breakout from the range. And after that, after this very strong impulse that broke out, we had also a correction. Now, in general, if you have an impulse, if you want to measure that correction after the impulse, you need to take your Fibonacci from the low to the high of the impulse. And if we do that, what we can notice is that the market has just retraced exactly to the 50% of the Fibonacci taken on that weekly impulse, which is a very strong level of weekly demand and support that we could expect this market to reject to the upside. And in fact, we are seeing this market reject to the upside. Dropping down the daily time frame, what do we have? Now, first of all, here on the daily time frame, I spoke about XRP USD few times in the past. I spoke about it after the creation of this M pattern. From here, I explained all the reasons for which we could expect this rejection to the upside. The market gave us the move. Then we had the creation of this M pattern here. And from here, I made another breakdown explaining all the reasons for which we could expect this rejection to the upside. And again, that is exactly what the market did. And by the way, I will link in the description these two previous analyses so you can go and check them out for more free education. However, at the moment, we have to identify the structure that the market is currently providing from a daily perspective. And to do that, we just have to look left and see how from here the market created this red candle. So here the market found resistance, then it broke above that resistance, and at that point previous resistance was turned support. And the market so far has been respecting this area as support multiple times. And from here we could expect more potential bullish continuation, because we can also notice how at the moment the kind of pattern that the market is printing here is that of a wedge. And in general, when you have a wedge, at some point you do expect the market to break out to the upside. We can also notice how since we have an impulse and correction, if we want to measure the correction, we have to take a Fibonacci from the low to the high of the impulse. And in that point, in that case, we can notice how first the 0.786 was tested, now the 0.618 was tested. So the next level that the market should break is the 50% before then creating more bullish continuation. However, it's also important to put in mind that until the market will actually break above this previous high, we will not really have bullish structure from a daily perspective because the market will be trapped inside of this triangle formation. So the most conservative way would be to wait for the market to break above this resistance, and on the retest after the break of this previous resistance turn support, this is where we would have very good probabilities to see the market create a rejection higher and print a higher high. So basically break above this previous high here. Now, if the market will actually print this impulse and correction, how we could be approaching this potential longing opportunity. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside and for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here, you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the web market breakdowns with the Telegram signals, the CO2 data software, which is the one that we use in our Forex analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower past the testimonials, you will see that at the moment I'm running a special promotion in which you have the possibility to gain access with a discount. And since I have partnered with the Forex broker Blueberry Markets, if you open an account with them from the student dashboard, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that from here you have the possibility to join and gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. And I'll see you in my next video.